All right, everyone. So in today's episode, I'm going to give you my watch list for tomorrow, my game plan for the week ahead, and we're going to talk about this spark that drug ignited in the market because all of a sudden it is super, super hot. And this is bringing back some memories from some of the last times it picked up like this. Now, this week was not, it wasn't like the momentum that we had in February or even the momentum that we had in July. This week, we had some absolutely explosive moves. Drug going up over 2,000% in one day. And then even just yesterday, going all the way back up to over $70 a share. This is pretty intense. This is pretty wild. And it makes me think back in sort of 2020 when all of a sudden I had this stretch where things started to really pull away. So I want to kind of show you that because that's kind of what I'm feeling. And I don't know if that's what's going to happen. But, this week we had, I had a couple of decent days, 10,000, 15,000, whatever. And then all of a sudden, boom, $103,000. And that was the day after, that was on Wednesday, the day after drug made its 2,000% move, which I didn't trade. And part of me was like kicking myself for not trading it, but it didn't fit within my rules to trade it during that time of day based on how I've been performing later in the trading day, this month. So I had told myself, stop trading in the afternoon. You keep getting yourself into trouble over trading and giving back profit. But then, of course, here we end up having a stock, go up this much in the afternoon. So it was a little annoying, but nonetheless, that sparked the round of momentum. And then ATNF, this was the big one on Wednesday that I traded. This went from $2 a share to $20, made almost $100,000 on it. Absolutely incredible. And this is kind of what I'm talking about. That type of momentum where stocks are going up that much, that quickly, that's what's bringing back memories of, I guess I would say like May of 2020. So let's go into 2020 here. And let's look at, well, it must be June. So we're going to look at, you know what? Let's start with May. Let's see. So in May of 2020, let's see, we're going to go to May here. All right. So this was May of 2020. I remember, the month started kind of slow, a couple of nice days, like 8,000, 10,000, and then all of a sudden, boom, a $25,000 day. And then boom, a $47,000 day. Now at that time, a $47,000 day, I think was the biggest green day I had ever had. All right. And then a week later, a $40,000 day. So, and these days outside of that were still like solid $10,000 days, $20,000 days. So in May, I was up 225,000. Then we go into the month of June. First week of June, it's like back to back 25,000. 28,000, 24,000, 26,000. It was like unbelievable. We just kept seeing these stocks, just like ATNF, that were coming out with news pre-market and we're going straight up. Then we come into the second week and boom, $115,000. Best trading day I'd ever had up to that point. The next day, I beat it, $132,000. The next day was $58,000, which would have been the best trading day of all time had I not just had these two crazy days. And then boom, 81,000. So 4 days in a row are my top 4 highest profit trading days of all time. Then 66,000, top 5 trading days of all time. 224,000, 155,000, 225,000. So just right there, 9 of my highest profit trading days happened within 10 days. Just like that. All of a sudden, it was absolutely insane. And I made $1.3 million in June. And I didn't see it coming at all. Not even a little bit. It just exploded. And so I think what happened here, you kind of see how it was like all of a sudden in May, I had like a record breaker green day. And then the following week, I had another like really solid green day. And then I had like 5 back-to-back, just $25,000 days. Boom, 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 boom. And I feel like what was happening there was, we were having moves like ATNF where news would come out and a stock would go up 500%, 800% within 30 minutes. And in that first leg of the move, I was just trading it aggressively. And I got to this point where I was like, after a couple of days of seeing that, it was like, I need to buy more shares, right? you know, after the 5th time you see a stock go up 1,000%, on the 6th time you're like, okay, it's time for me to take a bigger position. And so that's what I did. And so that first week of June, I was just taking bigger positions, bigger positions. All of a sudden, 5 days into June, I'm up over $100,000. So coming in the second week, I'm like bigger positions, and the moves are getting bigger and bigger and bigger. And that's partly because short sellers were getting scared. Now, short sellers right now are having that same fear because drug on Tuesday, I mean, we saw short sellers lose hundreds of thousands. I mean, there was cumulative losses, millions, no doubt, of short sellers on Tuesday, right? So Tuesday, short sellers got absolutely wrecked. And so then on Wednesday, when we're all sitting down to look, and this, we're sitting down to look at the stocks and the scanners, ATNF pops up on the scanner and it starts popping. I think shorts, number one, a lot of them had already just blown up their account. So they were waiting to fund a new account. And so they're completely out of the market. If they had $300,000 or $400,000 that they lost, that's that much less buying power they have in their account. So they're not being that aggressive. So all of a sudden, shorts are just like, I'm scared. I'm going to just step back on the sidelines. Things are getting crazy. Boom. You don't have people selling right into the move, and you get this incredible 1,000% squeeze. Okay, then all of a sudden yesterday, Friday, or the day before yesterday, because today's Sunday, Friday, drug makes another move, right? Off it goes. And I traded this on Friday because it started the move pre-market, so I did well in it right in this area. But I think the same issue is shorts were nervous. Now, some shorts may have gone for revenge. They're like, I'm going to go back. This isn't going to work. And then guess what? They got squeezed a second time. Now, it went up to just under $80 a share before halting down a couple times and coming back, quite a bit into the close. But one of the things that I noticed on drug, which I talked about during my recap on Friday, was that at one point I noticed 4 huge orders sitting on the bid all at the same time. And this is like millions and millions of dollars of orders. I can't remember, it was $8 million or $10 million in orders. So I'm thinking someone out there has a $8 million, $20 million account, minimum of 8 to 10 million, probably more. And they've got 4 orders out. They were sitting on the bid. They were buy orders. And I thought, that's a buy order. So why is someone putting out a buy order that's that big, right? I was trying to kind of get my head around it. And I wasn't sure if it was, is it a short trying to cover? Is it a long propping it up, thinking it's going to go higher? I mean, it's kind of like a crazy amount of money to put in at such a high price. I don't know what's happening, but nonetheless, there were some big deep pocket traders coming out with, some huge money orders. Now, for context, I started the week last week with, let's see, I don't have my, I'm not logged in right now, but anyways, I started the week with probably around $200,000 in my trading account. And last week I made about $200,000. I doubled my account in like 1 week. So now my account's got closer to $400,000 in it. Now, by the way, my results aren't typical. I'm not saying that because I want you to assume that you'll have a similar result or a typical result. I've been trading for a long time. So all of a sudden, you've got someone with over a decade of trading experience, full-time every single day. When the market heats up, I know how to put the pedal to the metal. I know how to get aggressive. What I'm not always good at is easing off the throttle when it slows down. But I have no problem, getting on the gas, being aggressive, and making as much as I can during these windows. I'm well trained and well equipped to do it. So I know exactly what to do when the market heats up. And for me, I don't keep millions of dollars in my trading account. I don't feel like I need to for the majority of the time. And usually what happens is when we have these hot streaks, during the first kind of week or two of the hot streak, I might double or triple my account. It might go from $200,000 to $400,000 to $500,000, $600,000. And then now I do have the buying power. Now we're in the middle of a really intense hot streak, and I might start taking $500,000 positions and really sizing up. And then boom, next thing you know, it's a $90,000 day. 3 more days like that, now the account's at $900,000. 5 more days like that, boom, I'm at 1.5 million, and things really open up. Now, I'm not saying that's going to happen. It might not, but this momentum that we're having right now feels much different than what we had in February of this year, or what we had in even in July. I mean, February and July were good. July, if I go on to the month of July, I had 2 days that were good, $45,000 back-to-back days. But, and the rest of the month was decent, $10,000 days. But then it kind of finished a little slower, nothing crazy. August, again, decent month, but nothing crazy. And then October, all of a sudden here, and September was relatively slow. And then October, just been decent. And then boom, and then all of a sudden, this doesn't include the 40,000 I made on Friday. I haven't imported that yet. So you got another $40,000 day right here. So, part of me was bummed that it was the weekend, because I was like, I don't like interrupting this momentum, because I was thinking, all right, I can't wait to come in tomorrow and, try to have another big day like this. But we do need a couple things in order for that to happen. So when it comes to the watch list for tomorrow, in order for me to have a $20, $30, $40, $50,000 day tomorrow, what do we need? We need a stock that's A quality. That's the most important thing. Now, when I sit down in the morning, I'm pulling up the scanners, and you can see we've got this, we're now showing the news feed right here on the scanner. So you can see if there's breaking news and what the headline is right here on the scan. So if I see a stock that hits the scanner that is priced, that basically is an A quality setup. And some of you guys have been asking me, Ross, can you help really identify what's the difference between A quality and B and C and D? So an A quality setup is going to be a setup that meets all 5 criteria, all 5 pillars of stock selection that I've broken down for you guys in other episodes. So if you haven't checked out those episodes, then you really should do that. So all 5 pillars of stock selection are met. I'll put a link in the description for a free class that you guys could watch that's going to walk you through that. So that'll be pinned to the top of the comments in the description. So you want to make sure we meet all 5 criteria of stock selection. And if a stock meets all those criteria, then the stock is A quality. Now, just because the stock is A quality doesn't guarantee that I'm going to trade it. Why not? Well, what if the stock is A quality, but the daily chart is terrible, right? We do the technical analysis and we're like, the daily chart's terrible. It's right under the 200 moving average. So even though it's A quality, it might still work, but that setup is not A quality. So first thing, A quality stock. So like if I see a stock on Monday that meets all 5 criteria of stock selection, which at this point would be price between 2 and 20, 5 times relative volume, has a news catalyst, has a float of under 20 million shares, that's first tier, and then is up at least 10%, I'm going to be excited. Now, amplifiers to these 5 criteria right now in this market, Drug had a float of 4.46 million shares. EFSH had a float of 657,000 shares. And this one on Friday went from $2 to $10. So lower float stocks, what was ATNF? 930,000 shares. So, and then PEGY, PEGY, this one made a big move on Friday. This says it's 157,000. It's not actually that low, I'm pretty sure. I'd have to go check the filings. But, this one made a big move too. So at this point, if the float was less than 1 million shares, I'm going to be pretty aggressive, because I know that right now those are the stocks that are making the biggest moves. If the float is less than 5 million, I'm still going to be pretty aggressive. If the float is between 5 and 10 million, I'll be pretty aggressive. If the float's between 10 and 20, I might give it a second. If the float's above 20, I might not trade it. It's no longer really an A quality stock. So, right now I would say that sort of the way we've been generally seeing momentum, let's see, how do we do this? Let's see. So I'm thinking the 2 things that we're measuring are float and percentage change. So this is just going to be a little funny though, because this is going to be 50 million float. This is going to be 20 million. This is going to be 10 million. We're going down. And this is going to be 5, and this is going to be under 1. We'll just say under 1 over here, under 1 million shares. So, and then this is going to be like 1,000%, 2,000%, which is like crazy. 500%. I think the biggest move I ever saw was something like, we definitely have had 3,000%, but I'll just say 5,000, just 2,000, 1,000, and then 250 and 100. So generally, stocks that are in the 50 million share float range, it's pretty rare that you see, anything really crazy. You're down here. Maybe you get a 100% move, but not usually. If you're looking for where the 2,000% moves, they're not on the 50 million share float, with the exception of GameStop. GME was the exception. It was a 34 million share float, so it was kind of like right here. But that was an exception and a very amazing time, but not the norm. So where was Drug? Drug was up here, right? So Drug was right here. ATNF 1,000 was right here. EFSH, is right here. Peggy was like right here. And this is what you're going to kind of notice, that this is where we're going to see the big moves. And then as you come down, it's kind of like down in here. So it doesn't mean, look, I mean, if we don't have something that's right here, then I'm fine with settling for what's here. I mean, this is going to be like a normal day. But in a hot market, when we're seeing these types of moves, and we've seen a number of them, then I'm thinking, okay, I want to catch that type of move. So what type of stock do I have to be looking at? It's not going to be a 20, 30 million share float stock. That's just not what's going to produce that move. It's not likely. The imbalance between supply and demand is the highest over here. And one of the things that's really incredible is that the concept of float rotation. So the concept of float rotation is that you have a stock that, let's say, has 1 million shares in the float. So that's the float. That's the number of shares available to trade. Now you have to remember, of that float, some of those shares, and we don't always know exactly what, but some of them are locked up. So this is a padlock. They're locked up in the sense that someone owns those shares and they're not selling them. So those shares are effectively like off the market, right? So then you have the number of shares that are free, sort of with the free float, which is always going to be lower than the actual float. That's the number of shares that people are actually freely buying and selling on an intraday basis. So that's the first thing. Now, some of these shares here, we don't always know. Some of them are held by insiders. So they're probably going to be holding for a long time unless they're trying to cash out. And some are held by institutions. Now, institutions will sell into moves almost always. So if you have a high percentage of institutional ownership of the float, then we can expect that into a move, you're going to have people probably that are dumping, especially if it's up 1,000% or something like that. They're going to take profit. So one of the things that we can do is we can check the percentage of institutional ownership to see, is it 50%? Is it something really high, or is it 5%? So let's imagine for a second that you've got a 1 million share float and it's 5% institutional ownership. So 50,000 shares. So should we worry that, this company, this hedge fund or whatever is going to sell 50,000 shares? Well, if the stock has 50,000 shares of volume today and is up 100%, we might need to worry because the volume doesn't support the sellers that are going to come out. If it's got 5 million shares of volume, then we don't have to worry at all because everyone here, in fact, who's holding, all of the insiders, all the institutions, if they want to sell, and these are just, private retail holders that aren't institutions but aren't insiders either, but aren't selling, which is a high number in the case of GameStop. Even if all of these people want to sell, there's so much volume to absorb all of their shares, they can get out. And that's the concept of float rotation. When the entire float changes over, trades hands, what it means is that everyone that was in that wanted to sell could have sold. So now you have a stock that's up 1,000%, and you don't have to worry about people dumping and taking profit because there's so much volume, it could have supported all of them dumping 5 times over, and the stock is still holding up. That's a big deal. Now, it doesn't mean it won't eventually dump. It can, and that's because new people come in. You typically, at that point, it'd be short sellers who try to drive the price back down. But in the short term, you can get these huge moves, and so higher float rotation often creates the bigger move. So naturally, well, let's look at drug. So drug, or even, it doesn't matter, but I'll pull up drug. So drug, how much volume did this trade on Tuesday? So on Tuesday, drug traded 102 million shares of volume. The float is 4. So it's got 20 times float rotation, right? 25 times float rotation. That's incredible. So everyone that was in could have sold. Now the volume on Friday was only 27 million shares, not as high a float rotation. So that's okay. I mean, it still went higher, probably because shorts were nervous, but not as high. ATNF. Now this one ended up having a red day as the day went on. It opened high. It had 80 million shares of float rotate. 80 million shares with a 900,000 share float. It's 90 times float rotation. Now I think what happened on this one in particular was it had such an explosive move pre-market that once it failed to break through pre-market highs, shorts got in with a stop right here at the pre-market high. So that's a common strategy. Short against high a day. So your risk is, as long as it doesn't go back through the high a day, you're good. Now, if it goes back through the high a day, like drug did, you've got to cover. And if you're covering on a stock that's a 900,000 share float and there's not a lot of sellers, then when it goes through the high of day like this, boom, that gets pretty scary, right? So you've got to be careful with that, especially with these, small float stocks. And one of the things I actually recently said was that if I was trying to think of the fastest way to blow up my account, the first thing is I would do options, because options expire worthless at the end of, if it's a weekly option or something like that. So probably the first way would be to trade options, because they have a great chance of expiring completely worthless. So that'd be the fastest way to blow up your account. The second fastest way to blow up your account and to put yourself into potentially millions of dollars of debt would be to short a small cap stock that has incredible momentum, like drug, that goes up 1,000 or 2,000% in a day. And so then again, if you're thinking, all right, well, I better be careful about that. So what type of stocks should I avoid shorting if I don't want to blow up my account? And you're probably going to be thinking, well, maybe stocks with a float of under 5 million shares, right? So now, inversely, long bias traders are thinking this is exactly in a hot market where I want to be focusing. So although I might see something that pops up on my scanner that's kind of in this area or this area, I may even say focusing on this right now would be an opportunity cost versus waiting for the next one of these. Now, if we're having a hot day, I'm going to try to focus on waiting for the next one of these. So how are we going to actually find it in real time? And is there anything from Friday that we should be, having on our watch list? So at this point, although drug did give us, day 2 of continuation, well, it wasn't really day 2. Drug popped up, had a huge move, and then had 2 days of rest, and then gave us the second leg higher, right? So we had this big move, and then day 1, day 2 of resting, and then boom, it takes off and goes all the way up to here. So could drug continue to hold up over the coming days? It certainly could. It absolutely could. But the problem for me is that at this price, the spreads are bigger, and so the risk is higher, and my profitability is actually lower, and my accuracy is lower when we look at how I do on higher price stocks like this. It's just too easy to make a big mistake. So drug is kind of out of play for me because of the price at this point. ATNF, is that worth watching? Well, it did actually pop up on Friday from 4 to 8, went up 100%, right? First daily candle made a new high, but now it came back down. So it ended up being kind of like a shooting star candle. So that's probably out of play. EFSH from Friday, an incredible move. Is it going to be worth watching in a couple days? Maybe, maybe, but probably not Monday. Probably needs a couple days to pull back. So let's see, what were some other stocks that we traded this week? Let me just look at my calendar here. So October, SOBR, sober. Unfortunately, it's pulled back too much. This one was kind of interesting because the thing with sober was that it did have a news catalyst, but most of the move was on very light volume. And so it wasn't able to hold those initial levels because there was some profit taking, I think. And then the chart got kind of screwed up. So most of those moves were on volume that was just, I think, a little too light. Pixie, that was another one. I've traded that one a few times. So again, look at this move from $6 to 20, right? I mean, that's the one that, got some good trades on that on Friday. So golly, it's some wild stuff, but they're not clearly, this one didn't hold up by the end of the day. So finding one that's going to hold up is important, but I think shorts, rightfully so, are being a little cautious. So here again, you get that first move up, it can't break through the highs, short with a stop against high a day. So kind of letting that first spike happen, because if you get short here and then this goes to 35 or 38 or something and you're just like, what? You're down 10 points. So it's like, let the first pop happen, let it pull back, let it try to come back to the high, and when it fails, then everyone's kind of bailing on it then. Longs are bailing and shorts are now, adding. So that's kind of feels like the safer spot to be positioned on the short side. And so for me, some of these are going to move too fast to even jump in on the first leg. But what I'm generally going to be doing is looking for the first micro pullback and entries in your half dollars and whole dollars. And then as things are pulling away, let's say I get in something at, we'll pull up the Pixie chart here. I don't actually even quite remember where I first got in this one on Friday, but but we'll just look at the chart anyway. So maybe it'll bring back my memory. Actually, we'll see. All right, so what's going on here? I'll do the 1 minute chart. Okay, so Pixie. Yeah, see, I can't quite remember this. Is this the one that I got in around 1080? It might have been. I wish I could pull up my 10-second, but for some reason it's not loading all the way. Unless I'm too far back. No, I don't know. It's just, I think it's because it's after hours or whatever. But anyway, so okay, so this one, I think what happened here was we squeezed up on the 10-second. We did a micro pullback, and I bought that dip at about 1080, and then we rip up to 14. We pull back, we pop up to 16, we pull back, and then we got this curl here from 14 back up to 18. And then we pulled back here. This was the second attempt. That was the rejection, and then that was where we were kind of done. And that rejection was pretty nasty. It was like one big sell order kind of dumped it, so that kind of broke the chart. In fact, I feel like we saw something like that on drug on Friday as well, which wouldn't surprise me pre-market. So we'll go back and look at that. So my thought is, was it this candle? It might have been this candle here, that kind of red candle. So my thought is, one of these pops up. All right. So we have, so let's just, whatever, I'll just do it in blue. So stock pops up, pulls back for a second. Let's just say this is like 750. So then my strategy here is to buy the micro pullback. So the way I see it popping up first is it's hitting my high day momentum scanner. Now, sometimes someone will call out the stock in the chat room. They'll say, hey, look at, XYZ. I'll pull it up and I'll be like, oh yeah, okay, I see it. And it hasn't hit my scanner yet. And now that doesn't happen that often, but every now and then that'll happen. So anyways, if someone says something, I might take a peek and look at the stock, but generally I'm going to see it on my scanners, usually first. Sometimes I'll see something moving up the top gainer scanner, moving up the running up or the small cap scanner, but I've got my audio alerts on. So I see something at the scan, I pull up the level 2 immediately. As I see it spiking up, now I pull up the level 2 immediately if it meets all 5 criteria and the float is less than 5 million shares. That's when I'm going to be as quick as I can. If the flow is less than 1 million shares, I'm going to pull out my turbo fingers and try to really get in that as quick as I can. At least pull up the level 2 as quick as I can. So 750, let's say it pops up, it pulls back just for a second. And let's just say at 740, there's a 10,000 share buyer, something like that. So there's a buyer on the bid. So then I might think I'm going to get in right here at 750. My stop is 740. And I'm looking for this, if it's really strong, to go straight to 8. Now, it's not impossible that we would have a little hesitation at 775 at the quarter, but if we go straight to 8 and it breaks over 8, then one of two things are going to happen. One, if it goes there really fast, I'm going to add at 8 and move my stop to 775, which is break even. So I'll move my stop to break even. And then my next target is 850. Now, if it goes to 850 and goes straight to 9, I now have two choices. One, I take profit and I'm up over $1 a share at 775. The second option is look at the daily chart and ask myself, how high can this go? And how strong is this news catalyst? Because if it's strong and this has a good daily chart, then I may be thinking, I better add again. So I add again at 9, and now I move my cost basis from 775 to let's say 825, and then all of a sudden my next target is 950. And looking for the move up to 10, right? All of a sudden we go up to 10. And in the case of Pixie, next thing you know, we're printing 12 and we're at 14. And just like that, I'm in at 825. I'm up $6 a share. Let's say my starter was 5,000 shares. I doubled to 10,000. I now am at 15,000. $6 a share times 15, that's a $90,000 winner. And it's not on a massive position, relatively speaking, right? It's a 100% move. It's a 100% move from 7 up to 14. So that's kind of the anatomy of how something happens like on Pixie and all of a sudden, or on ATNF, and all of a sudden I'm up $80,000, $90,000. If I just take my profit off immediately, that's the conservative and the safe move. In a hot market, I'm going to take more risk because I know that if there's ever a time to take risk, it's when we're seeing these types of moves. Now, something to be careful of is if we're seeing a lot of full round trip rejections, where a stock goes from 7 to 14 and then right back to 7. Because if that starts happening, then shorts are going to start thinking, I better just start shorting while this is popping up because it keeps coming back down. So what's going to ultimately determine whether or not a stock is able to hold or it does that round trip is a combination of factors. One is the quality of the news, and two is sort of the state of the company. Is this a company that's going to be selling into this move? Do they have a shelf registration? Do they have warrants? People are going to look that up and they're going to be like, this is a company that has no money on the balance sheet. They've got debt. They need to raise capital. And people are going to start thinking this is a stock that is going to drop. They're going to need to raise money. Now, they could be wrong. You could have something like drug that catches everyone by surprise. But, that's something that we're going to have to be thoughtful of. So it's hard in the moment to know that this is the stock that's going to do something like drug. Nobody really knows. So all we can do is trade the technicals, trade the price action that's right in front of us. And I mean, look, if we're seeing stuff that's squeezing, if we're seeing this kind of action, then I'm going to be more aggressive. Now, I was thinking about my 5,000 share starter position, which I maintained last week with the exception maybe of a couple of cheaper stocks, but I don't know if I can't remember if we have had any. But anyways, generally 5,000 share max size until I'm up over $1,000. But what was happening was on several of those days, I was making $1 a share on the first trade and I was up, 5,000, which is great. But that also made me think I kind of left some money on the table on that first trade by not taking bigger size. So I'm thinking right now I should lean in a little bit and increase my starter from 5,000 to 7,500 shares, maybe 10,000. Now I have to be a little careful because look, I could come in on Monday morning, I take 10,000 shares of the first trade and it dumps 50 cents, I'm down $5,000. That's my max loss. So I've got to be a little bit careful, but I think if a stock meets all 5 pillars of stock selection, if it looks really good and the float's on the lower end side of that spectrum and it's got a good daily chart, I'm probably going to want to be aggressive. Now, it's going to depend on, in the moment, how much that stock has already popped up by the time I'm pulling it up, what the spreads look like, whether or not there is a bid at $7.40 or the nearest bid is $7. Now, if I can't manage my risk, I'm not going to take big size. Even if I'm going to allow myself to on another stock, if on that particular one I can't manage my risk, I can't take big size. But if I feel like I can manage my risk, I'm going to try to increase the amount that I'm willing to risk in exchange for right now the reward that we're in a hot market, and I think I'll get paid for that. I got paid for it last week, and right now I don't see any reason why that's changing. Especially after drug making this continued move, I feel like right now, if we think about sentiment and kind of who's in the driver's seat, it feels like the longs are in the driver's seat. And it feels like the shorts right now are having to kind of like batten down the hatches and be careful. And look, I mean, I've had to batten down the hatches when everything is dumping and it's not working. So, this is the ebb and the flow of the market. And you've got to be able to ease off the throttle when it gets cold for your strategy. But then at the same time, when it's hot, you want to try to be aggressive. Now, for a beginner trader, I'll say this. The best time for you to start learning how to trade was 10 years ago, right? The next best time is now. So if you're sitting down right now and you're at the beginning of your learning curve, I'll tell you, you're not going to fully maximize on this current hot streak. It's just not realistic. So take it as an opportunity to practice in the simulator, to gain experience, to see what it's like to trade these big movers, but know that your time will come. Right now, you've got to pay your dues. You've got to study. You've got to gain your experience. Don't get in over your head. You don't want to slam these stocks at high a day with real money, with full size, not knowing how to trade if you're a beginner trader. So I don't want you to get over your head. I want you to slow down. I want you to just sort of remember where you're at. But for me, for someone who's been trading for a long time, finally having this type of wave coming up is like, wow. Having a 6-figure day this year, I honestly didn't see it in the cards. And the reason I say that is because I didn't have a single 6-figure day last year. So this is the biggest green day I've had in like 2 years. On Wednesday. And the reason that I was thinking I wouldn't have a 6-figure day this year was because I thought to myself, based on the way I trade, in order to make 6 figures, $100,000, I kind of need a stock to go up like $10 a share from 7 to 17, something like that, from 5 to 15. Because if a stock goes from 5 to 8, the only way you'd make 100,000 shares is if you had 30,000 shares full size from the bottom to the top of the move. And we never do that. So now double that. So you would need, 60,000 shares for half the move. I don't trade with that kind of size. Now I know some people do, and in theory I could, but I don't, because the problem is it's hard to take that type of size with a $5,000 daily max loss. That's the reality. You take that kind of big size, you're going to have $40,000, $50,000 red days. And I just can't stomach that. So I'm not saying it couldn't happen. I could have a day like that. And if I do, I'll recover because, of course, look, I'm in a good position, but I want to try to avoid that. So for me, with my max size on most of these stocks capping out at, a lot of times 10,000 to 15,000 shares. 20,000, none of these I was feeling comfortable with 20,000 shares. So, for me, 10, 12,000 shares, maybe. I need $10 a share to make 100 grand. And even then, I'm not going to capture the whole move. Now, it's easy to capture a big chunk of 10 points than it is to capture a big chunk of 2 points. Because a $2 move, by the time it starts to pull away, you're like, oh, it's starting to pull away. It's already up 50, 75 cents. And then, you get $1 from that. So you're really only getting $1 a share, maybe at most. But with a 10-point move, by the time it's up $1 a share, you're like, something serious is happening. And then you could still get $5, $6, $7, $8 a share before it tops out and comes back down. So, $8 a share times 10,000 shares is 80 grand. And if you're buying the dips and you're selling in the pops, you're buying the dips, you're selling the pops. And that's what I do. So for me, I get in. And then usually as we come up to these levels, we come up to something like, I'm in at 750, I add at 8, we squeeze up to 850 resistance, I take a little off the table. It comes back down, it holds 8, support, I add back at 8. Now you'd be like, why do you sell and then add back? And the thing is, for me, it just feels like when we come up to a resistance point and then I see on the level 2 that it's slowing down, I'm going to take some off the table. So for me, the way I trade is I'm adding, and then I add into the breakout. As we break through resistance, I'll take a little profit off the table. As when I think it's going to maybe pull back, it pulls back, I add back on the dip off of support, it goes up, adding through the next breakout, taking profit up into the next resistance level. So for me, if you look at the way I trade these, it's like add, profit, add on the dip, add into the highs, profit, and then dip, add. So I'm actively trading the whole wave up. And that's how I've always traded. And part of that is because I want to make sure, if I continually add, I'd go from 10,000 shares to 50,000. And then if it does dump, I'm in a huge position and then I can't manage my risk. So for me, I do better trading around kind of a core position or sort of a max size. So once I get to the max, it's like, all right, time to unwind a little and then catch the next dip, add back for the next leg higher. So yes, in hindsight, sometimes I look at it and I'm like, I would have done better if I just held my whole position for the whole move. But that's hindsight's 2020, and that's just not how it works. So anyways, this is kind of where I'm at here. And I don't really have a specific watch list for tomorrow because I really think that most likely the stock I make the most money on will be a stock that I don't even know it yet, because it hasn't either had the news yet or maybe it started to move a little bit after hours, but I don't even know if it's going to continue. So, you had LTBR after hours, but note that this is a 13 million share float. Not that that's high, but right now that doesn't meet the profile for going up 1,000%. You've got BIVI, this one. This one, 4.4 million share float could pull a move like drug. It's not impossible. We've got a lot of room up to the 200 moving average. So we might get something more on this one. Let me pull up my scanner for top after hours top gainers. So let's see. VSEE. Oh, we gotta save this here. VSEE, XPON. See, these are ones that popped up and then came back down, right? So we pop up, but XPON held up pretty well. Gosh, that 200 moving average is way up here. The only problem with XPON is that it had a 30 million share day back here and another like 15 million share back here. And both of those are red. So you may have some retail traders that are bag holders that got stuck on that one and are still holding. Could be an issue. But the float is 339,000 shares. So then actually, literally in theory, how many bag holders do you have? The float's 300,000 shares. Right? How many shares of volume did it trade? 1.6 million. Okay, so not a lot, and 1 million of it was after hours. So, it's, 3 times float rotation. But if Monday morning that starts cranking with some real volume, then it could easily absorb all of those people that were in. So when it had 30 million shares of volume, that was a pretty intense float rotation back here. But let me just look at that 5-minute chart. I want to say this one made a big move pre-market and then pulled back. Yeah. Okay. Here. Oh, right. Okay. Here we go. Wow. Yeah, that's right. So, yeah. I'm going to also check to see if those are Chinese, but from 6 up to 12. So, I mean, this one already kind of had its moment in the sun for what it's worth. So, unless it gets over 23, I don't know. I think it kind of works. I don't know. It sort of works against the setup when you have a recent move that big, because it's like we're sort of in the shadow of that move a little bit. But let me just check. So, oh no, but that was a 100-to-1 reverse split. And what was the date of that split? That split was on October 9th. So now hold on, let me just go back here. This was September 20th. Okay, so actually no, I'm sorry. So on this day, this would have been a penny stock. This would have been really, really cheap. So actually, because of the split. So actually we wouldn't have traded it on that day. It must have been on October 9th here. This was the day it had 30 million shares of volume. Right. So it kind of just pops up and that's it. That was October 8th. Let's double check this. October 8th? No, it was October 14th. Sorry, guys. October 14th. Okay. Right. So started after hours, pre-market it pops up, and then it was just sideways and faded. So, right. So, I mean, if we got something like that, again, it's a pop at 4 a.m. and there's nothing we can do about it. Then the rest of it's just sideways. Again, people are short against that high a day mark. And then if it breaks through the high a day, that's when it gets exciting. Now, what sometimes happens is you break through highs, shorts are still holding, it comes back down, and if it can hold that level, then that's the place where people give up. So that's kind of inverse to a dip, where sometimes if we're looking at something for a dip, let's say like down here, for instance, we're kind of thinking we want to do a dip trade on this off of support. So we buy right here and we're like, oh, uh-oh. So maybe panic sell, but it comes back up. It can't break above it. And then it's like, okay, it can't give up. Now, in this case, it did come back above. But breaking above, coming back and retesting, and then moving higher. So anyways, that's it for me. I hope this has been helpful. And if you guys want to check out a 2-week trial, I will also put a link in the description. So make sure you guys check that out, and I'll see you back here. I'll be streaming bright and early for members at Warrior Trading, so I'll see you guys in the morning. All right, reminder as always, trading's risky. My results aren't typical, so manage your risk, take it slow, and I'll see you here tomorrow.